There's just not.
So what do you think about their Main Street growth, thinking, that train of thought about the business tax rates for pass-through entities? How do you see that affecting business owners? Because when I hear that, I think, oh my gosh, it'd be so nice to be taxed at a lower rate. It'd be so nice if I wasn't paying payroll tax on both sides, as an employee and as an employer.
Well, again, their proposal does not address payroll tax at all. That's not changing at all with their current proposal. Payroll tax, you'd still be paying both sides. That is not what they're talking about. They're talking about income tax. And again, income tax, taxpayers on average, 90% of taxpayers pay less than 25%. That includes business owners who have flow-through entities, because it all appears on their individual return. So they're still paying less than 25%.
Okay.
So our clients are not, but we have the minority of American taxpayers.
Okay.
So certainly my client base is paying some of the highest rates. But that's my client base, and has been my client base as I'm in CPA firms. That's not regular taxpayers.
So then a lot of the people who are complaining about, paying a lot in taxes, in reality, they really aren't
They're
paying
really
a
not.
lot.
And frankly, the business owners that I work with, their complaint is with the complexity of all of the licensing and compliance laws that they have to deal with, that everyone unilaterally puts in with, I pay too much in taxes, when really what they're referring to is they have to pay their county license, they have to sign up for state payroll taxes, state unemployment, federal unemployment, they have to do, each permit is different based on how many. That's the complexity that they're actually complaining about. They put it in the same bucket.
Okay.
They say, my taxes, it's crazy, but really they're mad at, I've got
County,
12 different
state,
things that I've got
county,
to track.
State, federal.
And then you have the business personal property tax return, and this return, then sales tax. That's really where the complexity is. When you look at the actual amount, the income tax rates are very low. We're actually in the lowest income
So then
tax
when
rates
people
we've
are
had.
talking to their CPAs this year, as everybody's sitting down and it's that time of year again, my favorite, my least favorite time of the year.
Yes.
Right?
I don't take it personally. I'm well aware that when I set up client meetings, 50% of the time they get postponed. I'll be in the meeting, I'll be waiting, and I'll get a call on my cell. Can I? Yes, you can postpone. I know I'm not everyone's favorite person.
not going to be able to do it today.
Yeah, I realize I'm not their favorite person.
Okay, so we've got to see eye to eye on this one. So what about family-owned businesses and with them repealing estate taxes? It would be so nice for people that do have, family-owned businesses, if the families won't have to sell off a piece of the business to pay the estate taxes. What are your thoughts on that?
Emma, that's already in the code. There are already several elections to make so that you do not have to sell the family business. Already, they're there.
Okay.
And estate tax, 10,215 were filed in 2014.
Yeah, well, the
In the
estate
entire
tax
US.
law, when did they changed the estate tax law a few years ago?
Yep, to $5 million.
To $5 million. So realistically speaking, there's a very minor number
Very minor.
of people in the United States that are actually paying estate taxes.
And those were returns filed. That didn't mean that they paid anything. That was just the returns were filed.
Okay.
So a lot of people file estate tax returns for something that's called the portability of an election. So they're not even paying taxes. So of those 10,000 returns that were filed, that included small businesses, there's already several elections in the code related to estate tax that allow you to postpone the payment of any estate tax if you have a family-owned business. It's already there.
Okay. So then this number 7, the more certainty for family-owned business is not.
It's already
necessary.
it's already there. It's interesting the marketing and the wordsmithing that happens. That's indicating that this is something new. That this was considered and thought of when the estate tax law was written. That there are going to be family businesses that are illiquid, that you want to keep in the family, but they're worth $20 million. But that doesn't mean you have that much in cash to pay. And how do you? It's already there.
It's already in there.
It's already in there.
Now, number 8 is more competitiveness. If you reduce our tax rates, and corporations are able to bring jobs, if they're able to bring money back into the United States, they're going to want to grow, and this is hopefully going to bring jobs back to America. I mean, is high taxation the reason why a lot of corporations left the United States?
I'm looking at my cheat sheet, so just one second. I'm sorry. Let's see. All right. Here we go. This is from
She's got like a stack. It looks like she's got this tax code in her lap.
I
It's like
do.
70,000 pages.
And I think that's part of the difficulty in talking about these issues seriously in any depth, because they are complicated issues and they require numbers and conversation, and people zone. I know that. So it's nice to say, hey, we're going to have this savings, and people don't take the time to get into the details because it's numbers. No,
Right.
you know, but when you look at the actual numbers, and here's what my cheat sheet. So I'm just going to read this. It's not very long, I promise. Okay. In the 3 decades through 1973, hourly compensation of the vast majority of workers rose 91%, and productivity growth was 97%. Close, right? From 73 to 2013, hourly compensation of a worker only rose 9%. Productivity rose 74%. So when all of our tax rates were down, everything's very low, everything's going well, people still did not make any money because they did not hire people, they did not hire more people. Instead, the people they had got more productive. Wow. So lowering the tax rate is not what's going to bring people jobs or corporations to hiring. I think there's just a fundamental difference in the understanding of what brings about jobs. Frankly, we live in a different world now where people don't stay with the same company for 20, 30 years. You don't grow with the company. That's just not the world we live in anymore. Instead, in high tides, all boats rise. So instead of betting on the boats, bet on the tide. If you have tax law that is in favor of people instead of in favor of businesses, people have money. I can now buy your service or product, and your business will therefore grow. As I said, I've never had a company hire someone for any reason other than they couldn't handle the volume of work they had because their sales increased. Ever. When I was an auditor for Fortune 100 companies, as I am working with startup companies now, the only reason they hire a person is because they have enough revenue to do it.